I got criticized for calling Putin a war criminal. He is a war criminal.
For the moment, it's passive, but he's certainly making a statement, and it's a statement about censorship.
The Russians obviously miscalculated the extent of Ukraine's resistance.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Piling on the pressure, the U.S. Treasury cuts Russia off from making dollar debt payments through American banks. Washington and Brussels weigh more sanctions. Nickel fallout. JP Morgan reviews its commodity exposure after last month's LME chaos. And stay with Bloomberg Early Edition. This hour we speak to the Legal & General Chief Executive Nigel Wilson and to the boss of the largest sunflower oil producer and exporter in Ukraine, the Kernel Chief Executive Ievgen Osypov. We'll send in your questions on IB Plus TV Go. Now, first thing is first, so let's check in on the markets. So we're seeing markets relatively calm. Now, European stocks actually advancing. U.S. equity futures also a little bit more elevated. We have a wonky double European stocks so that you really see the full extent of exactly what we're seeing, which is stocks gaining 0.3% higher, energy stocks following crude oil 0.7% higher. Now, we keep on looking at the inverted yield curve on various parts of the markets to give us a sense on whether we should panic a little bit more. Markets move really continuing to be shaped by the ramification of the war in Ukraine and, of course, being shaped by tightening monetary policy as well as raw material cost stoking inflation. So this is a picture across the board. I don't know whether we do have the European map. If we do, let's get to that. We also need to look at technology. A lot of the talk today will be on what Elon Musk is trying to do. All right. So that's across asset. If we have the European MAC, let's bring it up. Otherwise, we continue with the war in Ukraine, and the U.S. says it might impose further sanctions this week on Moscow as the world's attention focuses on allegations that Russian troops executed civilians in Bucha and other towns.
You may remember I got criticized for calling Putin a war criminal. Well, the truth of the matter is so what happened in Bucha. This warrants him. He is a war criminal. But we have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight. And we have to gather all the detail so this can be have a war crime trial.
Now, Russia denies its forces killed civilians. For more on what, of course, is going on, Bloomberg's Europe correspondent Maria Tadeo joins us. So, Maria, condemnation growing over these alleged Russian atrocities, both the U.S. and Europe promising more sanctions. How effective can they actually be?
Well, Francine, the biggest question until this point is the European Union and the United States promise the mother of all sanctions. But the reality is, until now, Russia has continued to service its debt, and of course it continues to sell oil and gas to the European Union. So the political pressure now, after the pictures in Bucha, is growing to put an end to that and actually come up with very effective, rough sanctions on the country. We know in the part of the United States, they're moving to block payments of U.S. dollar denominated from U.S. banks in the U.S. That would force Russia to either use its reserves or essentially default on its debt. And then when it comes to the European Union, Francine, tomorrow there will be a very important meeting here in Brussels of ambassadors to decide whether or not this time around they want to touch energy. But again, we know the reality about this. It's very divisive. The Germans, up until yesterday, we heard from Christian Lindner, say we're not ready to cut off gas. And today, the French Finance Minister Bruno Le Maire saying it is clear that we don't have unanimity at this point.
So, Maria, the U.S. warning that Russia may have changed its plans to concentrate its forces on Ukraine's eastern region. Where does this leave peace talks?
Well, Francine, and that was, by the way, very much reflected this morning by the General Staff of the Army of Ukraine, saying that retreat from the west means they're focusing now on the east, and there's very heavy fighting across the Donbass. In fact, the Ukrainians expect a major operation from the Russian army to try to lock their control of Donetsk and Lugansk. Now, Francine, when it comes to the peace talks, what we're seeing as the reality is we're very far from a ceasefire. The fighting continues on the ground, and for the Ukrainians, they believe that a lot of this is part of the tactics before the real talks begin, that Russia will try to really get control of the east, come in with talks or to the talks with that leverage, and then at that point you get into the serious stage of negotiations. But of course this means that the fighting and everything that it entails in human lives could continue for weeks.
Maria, thanks so much. Maria Tadeo there in Brussels. Now, Bloomberg has also learned that the U.S. Treasury has halted dollar debt payments from Russian government accounts as U.S. financial institutions. Now, joining us are Bloomberg Markets editor Christine Aquino and Valentin Marinov, head of G10 FX research at strategy at Crédit Agricole. So thank you both for joining us. Christine, I mean, this does not leave actually a lot of choices for what Russia does next, and whether it defaults or pays it using revenue or actually some of their reserves.
Absolutely, Francine. It really does corner Russia into a couple of options that they really probably do not want to make at this point. But I think that's the whole point of Treasury developments overnight, is to really up the ante on that front. And, you know, I think there's been a bit of a sigh of relief over the past month, because initially the questions with regards to the sanctions was that whether Russia was able to service its debt. And they've shown repeatedly over the past month that they have been able to make those coupon payments. They've been able to make principal payments. But now that again raises that question. And for investors, it really will be, again, a question of, is Russia going to have to default on its debt or not?
I mean, does it mean, Christine, that actually, you know, I guess bit by bit sanctions are being put up so that the pressure will go up and markets don't seem, especially on the stock side, don't seem to have noticed?
Yeah, I think that's absolutely correct, Francine. The way to characterize it is kind of it's incremental steps that we're seeing from various governments here with regard to Russia sanctions. Certainly on the bond payments front, that's what we've seen as well. Initially, prior to this action overnight, Treasury had indicated that it will have exemptions in place until the 25th of May for these transactions for Russia bond payments to get carried through. That kind of just is out the window now after the overnight developments. So again, I think it's now a matter of those incremental steps kind of adding up to really build the pressure on Russia at this point.
Yeah, and Valentin, this is having a huge impact on, of course, most of the foreign exchange and some of the currencies that you're watching. How much more volatility are you expecting?
Well, I mean, geopolitical risks are here to stay, and there was a period where we did see those risks subsiding, but following the latest developments, any renewed sell-off in the ruble in particular could indeed spike FX volatility. Historically, the euro, Swedish crown in the G10 space, but also Central Eastern European currencies with those massive economic exposure to both Ukraine and Russia, dependent on Russian gas, will likely bear the brunt of any correction there. Yeah.
So if you look at the oil-rich countries, something of Canada, if you look at Norway and some of the others, what happens to those currencies?
Well, it is the case that, as unfortunate as it may be, the war in Ukraine has ushered in a whole new template for the FX markets. We're in the world of where you buy high-yielding currencies of energy exporters. I would add the Australian dollar to the ones you've mentioned, and you essentially fund those purchases by selling euro, but also the Japanese yen, low-yielding currency of an energy importer. And that is here to stay. The one thing that is allowing that is the fact that risk sentiment remains remarkably resilient. So a potential spike in FX volatility could potentially derail that for a time, but ultimately those currencies could emerge as the biggest winners from what's happening at the moment.
And Christine, let me bring you over to a chart that actually Valerie put together, which is looking at some of stocks. So I think we're breaking it down in Europe, UK, US, and MSCI, and how they've been performing since the beginning of the war. If we can bring it up, I'll show you exactly what it tells us, and it does seem to have recouped a lot of the losses. What's the next, I guess, fault line for stock investors right now?
Well, Francine, I think now, you know, it would have to be kind of going back to those original catalysts earlier in the year. Again, the path of Federal Reserve policy very much still on the radar for investors, in addition to risks related to Russia and Ukraine. And I think the combination of this has muddied the picture a little bit for investors. You know, I think for a time there was this notion that what we're seeing in Ukraine could potentially slow the process of policy normalization. But we've heard from several Federal Reserve policymakers over the last few weeks that they really are driving home this point that, look, 50 basis point rate hikes, potentially multiple rate hikes of that size could be in the offing here, because they really want to get ahead of that inflation factor. And so, you know, it's been a fight, I suppose, in terms of the prominent market catalyst between these two. But I think now the attention is shifting again to the Fed and what it's going to do next.
Yeah, all about the Fed. But I do want to ask you, before we get onto the Fed, Valentin, we have some of the Russian reserves. I don't know whether we have that chart, but again, it's a good chart and seeing how much they've used so far since the start of the war. Let's bring it up, and here it is, as if by magic. We have the Russia reserve drain. I mean, where does this economy end up? Do you look at Russia?
Well, on occasion we have to. I mean, it is the one place that's driving the markets at the moment, but they are slowly but surely running out of reserves. If anything, they have certainly run down their dollar debt, so they don't have to really use a lot of those at the moment. The latest restrictions, however, may indeed speed that up. It is the case that the Russian central bank, with their massive hikes and indeed the capital control restrictions, managed to stem the outflow. But the thing is, and as you said at the very beginning, the Western allies of Ukraine are trying to ever so slowly tighten the grip. And one of the consequences of that would be Russia slowly but surely running out of reserves, as they indeed have to rely on their onshore reserves to repay their FX debt down the road.
All right, so thank you both. Our Bloomberg Markets editor, Christina Kino, and Crédit Agricole's Valentin Marinov, even, if I can speak. I need an espresso. Both stay with us. Twitter, this is what it's doing in pre-market trade. A lot of chatter on Twitter on the back of Elon Musk now being the biggest shareholder. He was tweeting about whether there should be an edit button. But then if you look at a lot of the news around it, it's also he'll be a passive shareholder. So we were wondering, you're the world's richest man. You only take a 10% stake. Are you really going to sit on your laurels and be passive? Or are you going to change what the strategy and also, as he's been saying on Twitter, go for more free speech? Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we speak to the Legal and General Chief Executive, Nigel Wilson, to the boss, also the largest sunflower oil producer and exporter in Ukraine. That's the Kernel Chief Executive, Ievgen Osypov. Send in your questions on IB plus TV Go. This is Bloomberg.
All eyes are on not just Russia and Ukraine, but all the rest of us in terms of how we're going to react. And there's a complex set of dynamics at play, certainly on the economic front.
Well, that was Catherine Tai, U.S. trade representative, speaking exclusively to Bloomberg. Now back with us, Bloomberg Markets editor Christina Kino and Valentin Marinov, head of G10 FX research and strategy at Crédit Agricole. So first of all, Christina, when you look at some of the dynamics, and we're talking a little bit about the fact that it's not the same catalyst for stocks than it is for bonds, everything, of course, is underpinned by inflation and forecasts of what the Fed does. Are we seeing banks kind of more aligned than they were just a couple of months ago as data comes in?
Absolutely, Francine. I think, people now are really coming to the realization that inflation is here to stay. It's no more transitory, which was the discussion, point of discussion a few months ago. And so I think investors have now had time to adjust really their strategies for that. We are starting to see, for instance, even in the equity space, start to think about what would be kind of the inflation hedges within that space. We're starting to see people thinking about companies with a good cash flow, good pricing power that they're able to pass on costs to investors. And in the bond markets, the question that's being asked at the moment is, have bond yields really risen enough to compensate for that inflation bite for investors? We're already starting to see people asking the question of whether it's time to go back into 30-year Treasury yields, which we know have had a really massive run up. And Treasuries in general have had a record quarterly loss in the first quarter. So you're starting to see some signs of bargain hunters and bottom fishers at this point.
Yeah, and if you go back to what it means for currencies, and first of all, what does it mean for dollar? Does the sanction have a ripple effect? Because, a lot of countries around the world say, look, they're no longer reliable as a reserve currency, so I want to get out.
Well, it is having an impact. And one interesting consequence of what's happening is that many emerging markets are now essentially considering their dollar exposure as making them vulnerable to future dollar sanctions. So essentially, there is a temptation that they could actually follow in the suit of the Russian central bank, really reduce that dollar exposure and do what they want to do, pursue a more independent foreign policy. I'm not saying starting a war, but still. So from that point of view, there's a bit of a clash between the role of the dollar as the king dollar, king of the G10, and the role of of the US really as the sheriff of the global world. And ultimately, all that may boil down to a situation where we could have a global economy which is split in economic blocks that have less use for the dollar as a global transaction currency, which could mean that the role...
How do you play that then?
Well,
Lower yielding currencies?
Well, ultimately, it's the case that you have to be looking for replacement proxies. You're buying the renminbi, you're buying the euro, for the time being still the most liquid proxy with its own problems. But the renminbi so far has been the biggest beneficiary by far, and that's likely to remain the case.
But that's also divergence play, right?
But it is, in a way, it's the case that if you imagine a world which is dominated by certain superpowers and by implication their currencies dominating the transaction flows there, these will be the biggest challenges to the dollar in the next 5 to 10 years.
Christina, how should we look at oil right now?
Well, yeah, it's very interesting, Francine, because the knee-jerk reaction, of course, is higher on the back of potentially more sanctions. And you can understand that anything that kind of is an indication of potential escalation in the conflict would boost oil. But I think just looking at the comments themselves from what we've heard from the EU and the US, again, you know, these are small steps, incremental steps that they're taking and not necessarily automatically amounting to the biggie, really, which investors are watching out for, which is potential just en masse oil embargoes for anything that comes out of Russia. But, you know, that's certainly not something that Europe, for instance, would want to do at this stage, considering how much they're getting from Russia. And so there is potential for investors at this point to over-egg and over-interpret what we're currently hearing in the sanctions front and translating that into a higher oil price. I just question the sustainability of that at this point.
I love his setup. We're going around the world in like 90 seconds. What do you do with yen? Do you play it against Aussie dollar or
Aussie dollar, definitely, I think.
Not US dollar.
Well, US dollar is quite a bit overdone, overvalued, overbought. I mean, Aussie could go to 80 cents per dollar. It still has further to go, according to our models. And the yen is already quite a bit undervalued there. It is the case that the BOJ is getting a bit uneasy about it. The MOF really has been on it last week. So it is also the case that historically, at least, when you get a very undervalued yen, really the Japanese investors, the biggest buyers of treasuries that have been doing so unhedged, they start to worry about a downside risk. So essentially any future flows from here into the US Treasury market from Japan likely to be hedged. And that's going to weaken the positive correlation between treasury yields and dollar yen. So I think the best days of that trade are behind us, as in long dollar yen. So look for alternatives. Aussie yen, yes, definitely, yeah.
Thank you both for joining us. Valentine, thank you so much for that great insight. Our Bloomberg Markets editor, Christina Kino, and Valentin Marinov, head of G10 FX Research and Strategy at Crédit Agricole. Do you like it how I pronounce it the French way? I don't know why I need to, but I feel like, you know, it cheers up Valentin. Plenty more still to come on Bloomberg Surveillance Early Edition. This hour we speak to Legal & General Chief Executive Nigel Wilson and to the boss of the largest sunflower oil producer and exporter, Kernel Chief Executive Ievgen Osypov. Send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, JP Morgan said to be reviewing its business with some of its commodity clients, a move that could actually drain more liquidity out of the sector. This is after last month's nickel short squeeze. Well, joining us now with the very latest is Jack Farchi, a world-renowned author with our Javier Blas, also an energy and commodities team reporter. Now, Jack, first of all, what does this move mean for the already very turbulent nickel market?
Well, JP Morgan is a huge participant in commodity markets and particularly in metals markets. There aren't that many banks that play a big role in metals, and JP Morgan is by a long way the biggest. Now, the story that we have this morning, it's saying that JP Morgan is reviewing its exposure in commodities. It's doing additional due diligence on a number of its clients, looking again at some financing deals. So we're not saying that JP Morgan is getting out. But it's going to be a concern, certainly, for commodity markets and particularly metals markets, where liquidity at the moment is really very thin. I mean, you can see nickel in particular. Yes, the market has reopened after that massive short squeeze, but it's essentially not trading. You're trading a few lots a day. The price is barely moving. There's not an awful lot of activity happening on the market. and that's a pretty worrying and illiquid image of what is, a huge global market that matters a lot for the world economy.
So, Jack, what's the concern right now? Is there a big margin call coming that could send metal traders running for the hills?
Well, I think we saw it in early March in nickel with Tsingshan, this big Chinese, the world's largest stainless steel and nickel producer, had a big short position. Turns out a very big short position in LME nickel, and it got squeezed. But that happened in nickel. It could happen in other markets. Russia is a huge producer of commodities. As sanctions are ratcheted up on Russia, as seems to be happening, there's more and more risk of large price moves. And anyone who has big positions on commodity markets could be at risk of some moment when they can't pay their margin calls, and suddenly you see markets doing these extremely volatile things and blow-ups happening. So I think it's a risk that everyone involved in commodities is extremely aware of and worried about at the moment.
Jack, thanks so much. Bloomberg's Jack Varchi there. Now, still to come, we speak to the Legal and General Chief Executive, Nigel Wilson, and to the boss of the largest sunflower oil producer and exporter, Kernel. The Chief Executive, Ievgen Osypov, of course, joins us a little bit later on. Send in your questions on IB Plus TV Go. This is Bloomberg. Piling on the pressure, the U.S. Treasury cuts Russia from making dollar debt payments through American banks. Washington and Brussels weigh more sanctions. Nickel fallout. JP Morgan reviews its commodities exposure after last month's LME chaos. And stay with Bloomberg Surveillance Early Edition. Up next, we speak to the Legal and General Chief Executive, Nigel Wilson, and to the boss of the largest sunflower oil producer and exporter in Ukraine, the Kernel Chief Executive, Ievgen Osypov. Send in your questions on IB Plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, so let's check in on the markets. Actually, when you look at what stocks are doing, they seem to stay pretty much calm in certain parts, also even elevated. It's certainly the energy stocks that are giving a boost to the rest of the markets. Bonds are retreating amid worries about inflation and the policy response. So if you look at the pattern that we've seen over the last 2 weeks, market moves continuing to be shaped by the ramification of the war in Ukraine and tightening monetary policy as these raw material costs are stoking inflation. Now, we, of course, begin with the war in Ukraine. The U.S. says it might impose further sanctions this week on Moscow as the world's attention focuses on allegations that Russian troops executed civilians in Bucha and other towns.
You may remember I got criticized for calling Putin a war criminal. Well, the truth of the matter is so what happened in Bucha. This warrants him. He is a war criminal. But we have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight. And we have to gather all the detail so this can be have a war crime trial.
Now, while a consensus is forming that the war in Ukraine is a pivotal moment for ESG investing, a UK review is arguing that an H should also be added to the mix to represent health inequity. Now, the report published by insurance giant Legal and General and the University College of London Institute of Health Equity says ill health reduces productivity. Well, to tell us more about that is the Legal and General Chief Executive, Nigel Wilson. Nigel, so great having you in the studio. So thank you so much for coming on to talk about the report. I mean, first of all, there does seem to be a consensus, forming that it's pivotal that we look at things like the S and exactly what's happening in Ukraine in the investing. Do you agree?
Yes, yeah, and health is another part of that equation.
And so what does that mean in terms of health? I mean, first of all, if we just focus on how the war in Russia is changing ESG, will it change the way that we deal with autocracies? Does ESG need to be much more mindful of the good and harm that it's doing?
Indeed, I think that's the trend we're seeing, aren't we, right across the world? And it's very sad what's happening in Ukraine, and desperately sad at times. But actually, it's coalescing the good, and that people really want to do the right things, the right reasons, delivering right outcomes, which you've heard me say for many years with you.
So talk to me about the H that you want to add. Is it adding to ESG, or is it a part of ESG that needs to look at the health?
I think we're trying to add it to, because health is wealth, and people really understand that health really matters. And you know, we in the UK, a bit like America, are blessed with fantastic universities, do amazing research and whatever. And the background to this is Michael Marmot did a brilliant report in 2010 and revisited it in 2021 and found virtually on every measure we'd gone backwards. And we started having a discussion, dialogue with them, and how can we help as, you know, as somebody who has enlightened self-interest, because we all want happy, healthy, productive employees working for purpose-led organisations. It's sort of 101 of business right now, and this is part of the mechanism of getting us all there.
Yeah, so how do you measure it, first of all, would be my first question. It's extremely difficult. And do you not measure it through, you know, wealth, or is there a GDP metric that could work?
I think we're not short of metrics, believe it or not. And the university's got lots of metrics that they've been using, broken down by different demographic groups and whatever. And some of them are subjective. That's part of the problem, and therefore the historical data is quite subjective. But increasingly, we want to measure really what's happening in different organisations and being able to benchmark. And it's a bit like climate change a few years ago, the Scope 1, Scope 2 and Scope 3 in health, virtually parallel to climate. We've seen such a positive response to that across the world, very different from a few years ago, where we think health needs to be categorised in the same way.
But Nigel, so this would be what for? Is it in terms of investing? So is it investing in a company and for employees, or is it investing in a country? And again, is this because of COVID? Because health is very difficult. I mean, first of all, the data around health is extremely difficult. It's just if you have the money once you become ill to cure yourself.
Yes, that is one of the problems. I guess corporates in general, big business, is doing a pretty good job, and you know, this is a fantastic example. This used to be our building. You know, for 60 years, this is where we were. Bloomberg had done an amazing job making this a fantastic place to work with, healthy food, and health exudes out of this building. When we had it, it was rubbish, very bad work environment, and it wasn't living up to anywhere near our standards. So we ended up moving elsewhere and having a much better working environment. And all those things about let's all pay the living wage. In fact, let's all pay the living healthy wage for people so they can actually live a healthy lifestyle right now. Because the point you made about economics is true. We sort of tested this with a number of corporates, and everybody was up for it. I mean, the problem is not the Bloombergs and the L&Gs of this world. It's the thousands or hundreds of thousands of SMEs who are not doing this. And, you know, poor health is terrible for productivity. We've got a huge productivity problem in the UK, and we found actually in the data that, you know, regionally there's a huge difference in productivity, and a lot of that's, you know, 30% of that's correlated with health. But
Nigel, this should be addressed by the government, right? This is why you have your rules and regulation and minimum wage, and they should be taking care of employees.
They should be, in one sense, but actually we've always taken a view that we're very happy to roll our sleeves, as you know, and get stuck into these really big policy issues and try and make a difference. And we've done that in, you know, in housing and regeneration in lots of areas. You know, we've got tons of money to invest around these ideas, but we're finding this narrative resonates everywhere, and that people really want to step up and try and figure out how.
Well, does it resonate with chief executives? Because it also means, but it means that you're paying your employees more, and that leads to wage inflation.
No, I think that's a very old-fashioned view of it, to be honest. Is that
I'm very old-fashioned.
Yeah, people want to be productive and healthy and happy, and they want to feel, you know, pumped up when they come to work. A lot of people are missing it. I'll be missing coming here and getting grilled by you. It's so nice.
And we're pumped
today. But we need to change, and we need to change for the better. And COVID was a catalyst for that. And the fact that actually in 10 years, and Gordon Brown worked with Marmot on that a long time ago, nothing's happened. Not enough.
I guess my point, Nigel, is that if you're a small and medium-sized enterprise chief executive, you can see your people, so you want them happy. If you don't, do you really need a metric to measure it, or do you say, "Hey, John, how's it going? Like, what can I help to make your life easier?"
You know, we were in Manchester yesterday, and actually, SMEs desperately need to actually. How do we do this? How do we make it happen? Big companies can make it happen. And what's the benefit? And how do, you know, people don't want big sickness and absenteeism. They don't want massive staff turnover. They don't want long-term sickness in there.
And they want loyalty.
They want loyalty. They want loyalty, absolutely. And mental health is absolutely growing exponentially amongst all the demographic groups. And we know that there's massive stress in the workplace right now, and we've got to resolve that and actually purposefully resolve that.
So do you think COVID has actually changed our relationship with employees?
Yes.
Has it changed the social contract with government?
Yes, absolutely. And I think we're trying to figure out what's the rules and how do we capture all that positive momentum and put real money behind this, so really making a difference. That's why, you know, we've got the partnership with UCL, fantastic, another one with Edinburgh, and Scotland has great data. That's why we've partnered with Edinburgh, Newcastle University, Bristol University.
Nigel, do you believe in the Great Resignation? And is that, you know, is there going to be a workaround that people are fed up and actually if they're not treated right, they'll just leave?
I think there's a massive macro trend, particularly along younger people, that they want to work for purposeful organisations and feel their jobs really purposeful. And that in one sense is fantastic. We're not seeing the Great Resignation in the data. I mean, there was so few people resigned, you know, for the last 18 months.
Is it coming now?
But is it coming now? We've not got it in our data. And it's interesting, the discussion we had a major CEOs of companies who represent 1 million people in employment in our office the other night discussing this. They're not seeing the Great Resignation. They're prepared for it. They're preparing for it. They're seeing a catch-up from the last 18 months, much more so.
All right, Nigel, always fun to catch up. Grilled, you see, I miss this. This is what you can do when it's back.
I'm so excited. I've got powder on my face first time in 2 years.
What are you doing next Tuesday, 9 a.m.? Nigel Wilson there, Legal and General Chief Executive Officer. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. New research shows the Earth may warm by more than 3 degrees Celsius, which is twice the international goal enshrined in the Paris Agreement. The report from the Intergovernmental Panel on Climate Change warns on still unchecked emissions of greenhouse gas pushing to record levels. IPCC scientists say emissions must peak before 2025 to keep climate targets alive. Now, Shanghai was reported more than 13,000 daily COVID cases for the first time as a sweeping lockdown and mass testing of its 25 million residents does continue. The outbreak in the financial hub pushed the national total to more than 16,000 infections for Monday. Now, that's the highest one-day figure recorded in China during the pandemic. JP Morgan is said to be reviewing business with some commodity clients after last month's nickel short squeeze, in a move that could threaten to drain liquidity out of the sector. Management has ordered a fresh due diligence on some existing clients, including metals traders and oil refineries. The US Bank is one of the largest players in global commodity markets and the biggest in metals by far. Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, Russia's invasion of Ukraine has caused a crisis in sunflower oil. We speak to the chief executive of Kernel, Ukraine's largest producer of sunflower oil, next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Russia's invasion of Ukraine has disrupted the supply of almost half of the world's sunflower oil exports, forcing companies to turn to alternatives such as palm oil in products ranging from potato chips to cookies. Well, joining us now to discuss the disruption is the chief executive of Kernel, Ukraine's largest sunflower oil producer. Ievgen Osypov, the chief executive of Kernel, thank you so much for joining us. First of all, our immediate thought goes out to everyone in Ukraine and, of course, some of the disruption and loss of life that we're seeing. Give us a sense, Mr. Osypov, though, of any kind of longer-lasting infrastructure damage by the war to the operations of Kernel.
Thank you for the invitation. And I want to say that now with current situation, we don't have such a big damage of our infrastructure. But this moratorium of the ports facilities, it's bring a huge impact on the future of sun oil production in Ukraine and our supply to all other countries in the world.
So more generally speaking, are agricultural facilities actually sustaining damage across Ukraine, or is it fairly contained at the moment?
If we speak about the current infrastructure, is still in a good condition, and we estimate the damage less than 5%. But at the same time, we're speaking about the current season of planting. Our estimation is reducing by 20% of planting areas in Ukraine and decreasing the yields. And it's bring us to the numbers that even in the last year, Ukraine produced more than 100 million tons of grains and oilseeds. And in this season, our estimation is not more than 60 million tons. It means it's 40% less compared with the last season.
And this would be for the spring planting across Ukraine. And so, of course, the effect would be pretty immediate in a couple of months or next year, actually. So, Ievgen, talk to me a little bit about, are you able to export at the moment the supply you have through rail and trucks outside Ukraine?
It's a huge challenge for us now to supply our goods for the market. Because before, for example, Ukraine export around 500,000 tons per month, and now we export 5% of this volume. And we believe that we need some time to build the new logistic chains through the west border, but it brings the time, and in any case, it's reduced the volumes of supplying oil to the market and grains as well.
But so in terms of actually exporting some of the things, I don't know how much sunflower oil you have at the moment. How much, if it's difficult via train and rail, is it possible via sea, or is it just containers of sunflower oil that are sitting in Ukraine with nowhere to go?
Now the Black Sea ports is blocked, and we have only one possibility to make export through the west border. And the capacity of this logistic chain is not more than 10% compared with the volumes that we need to export from Ukraine through the seaports. And it means that we will reduce the amount of export by 10 times compared with volumes before the war was started.
And this is immediate. What happens afterwards? I know you're planting less, and actually, if you're not able to export this, who will pay the cost of it?
Yeah, it's true that in such case, we will have a huge stock inside in Ukraine, and we have no stock and no goods for the market outside the Ukraine, and it's a big damage for the production, for the food security of the global world, and it's a big problem with liquidity for the companies and for the farmers inside in Ukraine.
I'm not an expert in sunflower oil, but how long can you keep it for before it turns? So if relations with Russia gets better, are you able to export it still in 3, 4, 6 months from now, or does it perish?
Yeah, we are able to export it in 3 or 6 months from now, but you know that nobody knows how long does the situation will be in such condition like now with closed ports.
Ievgen, have you spoken to any of your usual buyers? How will global buyers make up for the shortfall of sunflower oil?
Yes, every day we have talks with our buyers because they're waiting for our oil worldwide in the Europe and in the Asia. But now we don't have capacity to supply these volumes, and we need to stop the contracts. And this is the same position with other production companies in Ukraine. And it's a huge damage for our logistic chains and for our infrastructure of our cooperation with our partners.
Have the buyers told you that they're buying sunflower oil from elsewhere, or are they switching to another type of oil in the hope that your production comes back online?
You know that it's impossible to buy sunflower oil from some other origination because Ukraine is the #1 sunflower oil exporter in the world. Yes, our buyers switch to the other types of oils like rapeseed oil, soybean oil, and palm oil. Yeah, it's true.
All right, thank you so much, Ievgen Osypov there, the Chief Executive Officer of Kernel. And of course, we'll keep on top of exactly what's happening in terms of plantation and look, of course, at sunflower oil futures as well. Thank you, sir, for joining us. In the meantime, we're just getting some breaking news from the Commission President and Mr. Borrell, both saying that they will travel to Kyiv this week as peace talks are ongoing, but for the moment not very productive. Now, coming up, Elon Musk becomes Twitter's largest shareholder, and the world's richest person already has ideas for how to shake up the social media platform. So we'll have that story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Elon Musk has become Twitter's largest shareholder, and the world's richest person already has ideas for how to shake up the social media platform. By the way, he says he's not the richest person because he gave an interview saying it was Putin, but that we don't know. Joining us now is Bloomberg intelligence media and tech analyst Matt Bloxham. Matt, first of all, I'm obsessed with this story because Elon Musk has been tweeting about it, saying like, you know, there's this social media platform. I don't know if this is his voice, but, you know, does it have free speech? Does it need to change? And now he's talking about the editing button. So is it a personal gripe? What are his motivations behind it?
Yeah, I mean, I think obviously probably it's certainly not financially motivated, given that whether he's the richest or not the richest man in the world, he's very rich. So I think investing $3 billion or so in Twitter is neither here nor there. So it really is about his kind of broader, I guess arguably altruistic aims for society as a whole. And, you know, clearly free speech has been a sensitive topic for him. Perhaps he feels that by having a big shareholding in Twitter, he has more agency in that debate with regulators and policymakers about what a social media platform should be, how it should operate, what it should be allowed to do and not do.
I mean, I like the polls. I think last time I checked on whether we need an editing button, I think there was like almost 2 million people that, you know, were into it or not. So if you're a 9% shareholder, the biggest shareholder, but you say you're passive, how much influence do you have?
I think he has a lot, and probably a lot more than your typical 9% shareholder. I think because he has such a big following, and he can use those two things to become a kind of, I guess, a passive plus shareholder, if you like. You know, so that there's an AGM coming up. I think it's too late for him to kind of have any direct influence on that, but he's got a big vote in that now, and he can probably tweet ahead of that about some of the resolutions that are there, and perhaps get a bigger following. So I think he can start to exert his influence quite quickly on the direction of the company, its strategy. Whether an edit button comes or not, but I think it's a way of him demonstrating that he has power and influence over what they do.
I mean, could you see another platform coming on? I know, you know, Trump was also trying to do something. Is this like the beginning of a disruption of social media once again?
Potentially. I mean, I guess obviously we saw TikTok come from absolutely nowhere through the pandemic. So I think that the beauty of the internet is that there really are very few barriers to entry. And if you get the right kind of proposition, then you can really kind of grow at an exponential rate. I think it's perhaps harder in that kind of domain of you know, kind of traditional social media platforms. I think it'd have to be something fundamentally different that catches the younger generation to kind of really become a big scale platform.
The younger generation, like us, Matt Bloxham. Bloomberg intelligence media and tech analyst. I don't know why you're laughing. Matt Bloxham there with the very latest on social media. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kailey Leinz in New York, Danny Berger here in London, and this is Bloomberg.
The Russians obviously miscalculated the extent of Ukraine's resistance, which has been heroic.
All eyes are on not just Russia and Ukraine, but all the rest of us in terms of how we're going to react.
We must step up pressure against Russia, and we must step up our support for Ukraine.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, April 5th. Our top stories today. The U.S. Treasury is making it tougher for Moscow to pay bond investors. It's halted dollar debt payments from Russian government accounts at U.S. banks. A move by J.P. Morgan could drain even more liquidity out of the nickel market. The bank is reviewing its business with some commodity clients after last month's nickel short squeeze. And Twitter's largest shareholder has asked his followers whether the service should have an edit button. Elon Musk conducted the poll hours after he revealed a 9.2% passive stake in the company. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Anna Edwards, Matt Miller, and Kailey Leinz in New York. And Kailey, the market's attention once again turns to the threat of sanctions, but the session started out quiet with much of Asia on holiday.
Yeah, and the stocks that were open in Asia, or at least the markets that were open in Asia, largely moving higher, Danny. You had the MSCI Asia Pacific Index higher for a second day, up by about 0.2%. But once again, it was a move really led by technology. The Hang Seng Tech Index up 5.4% in Hong Kong. A lot of optimism around potentially progress being made on those auditing rules and therefore easing of concerns about any delisting of Chinese companies in the U.S. Of course, the other news out overnight was from the RBA, Australia's central bank, leaving rates on hold but opening the door to an earlier hike by removing the word patient from its policy statement. So that sends a hawkish signal and it rippled through Australian assets, including the short end of the bond market in Australia. The two-year yield up about 11 basis points at 195, 196 or so. That is the highest for the two-year yield going back to 2018. And then finally, the Aussie dollar, far and away the outperformer among G10 currencies. It's stronger against the U.S. dollar by about 1.3%, trading right around 76 cents, Matt.
All right, interesting look at Asia there. Here in the U.S., we don't see a heck of a lot of movement on S&P futures, but we do have a warning sign that I think a lot of people are starting to pay attention to in the Dow Transportation Index. It's down 4 days in a row, the longest set of losing sessions consecutively since December. And you know, if you're old school, transportation theory, Dow theory may give you a pause in terms of the bear bull market, the bear bull run. U.S. 10-year yield right now up a couple basis points, 4.8 to be exact. 244.31 is your level there as investors feel comfortable enough to let go of some of that debt. On the other hand, we have oil rising again today, so up 1.5% to 104.91 right now. And then Bitcoin also gaining only 0.75%, but still holding at a relatively high level, 46,653. So these seem to be the yield and Bitcoin possibly risk-on signs. On the other hand, futures not doing much and crude rising again could worry investors along with the transportation index. Danny, what are you looking at in terms of Europe?
It is really similar in terms of Europe not getting that strong risk-on or risk-off signal because there's a lot of divergences within the regional benchmarks. For example, DAX is up about 0.2%, but then on the flip side, you have the CAC 40, the UK stock index. Those are also moving lower. Now, a lot of the turmoil under the surface has to do with this energy play. A lot of oil-related stocks, per that oil price you just showed us, Matt, are moving higher. The threat of sanctions means oil is moving higher. Also, a lot of renewable energy companies outperforming in Europe. But the worst performing sector today is the basic resource index because of potential sanctions yet again, meaning oil and gas companies will find it hard to do business. So on a headline level, Europe stock 600 up just 0.3% with that turmoil under the surface. Now, the macro story also very important here with that higher inflation if there are more sanctions. The ECB now has to look at raising rates sooner, getting back to normal sooner. Vessler, one of the governing body members of the ECB, saying late yesterday that he would potentially see negative rates ending by the end of this year. So you have this big sell-off in European bonds. German 10-year yields, those are up about 3.5 basis points, 50.54% is where we stand. Gilt yields, those are also up about 5.5 basis points as well. All of that also translates into a euro dollar, which had been stronger against the dollar. However, that's now starting to fade as we've moved through this session. So euro dollar at 1.968. Now, when it comes to Russia assets, obviously a very distorted market. It continues to be so. But again, these concerns over sanctions are hurting Russian stocks a bit. We also had really weak PMIs is the weakest services data for Russia since the onset of the pandemic and those lockdowns. Also, a weaker ruble, but again, general dollar strength today. And you're also looking at 10-year bond yields for Russia up about 1 basis point, Kailey.
All right, Danny, well, you mentioned the data we got out of Russia. We are going to get more data here in the U.S. in the day ahead. At 8:30 a.m. Eastern time, we'll be getting U.S. trade balance numbers, and that will be really in focus. Then at 10 a.m. New York time, Bloomberg's Michael McKee will be speaking to Kansas City Fed President Esther George in an exclusive interview. Plus, Fed Governor Lael Brainerd will also be speaking in a virtual discussion on the unequal impacts of inflation. And finally, Ukraine's President Vladimir Zelensky is set to address the United Nations Security Council and also plans to deliver an address to the Spanish Parliament, Matt.
All right, we will watch for all those data points and speeches. Now, Bloomberg has learned that the U.S. Treasury has halted dollar debt payments from Russia government accounts at U.S. financial payments. This comes after alleged atrocities committed by Russian troops in the Ukrainian town of Bucha were discovered. President Biden spoke about it yesterday.
You may remember I got criticized for calling Putin a war criminal. Well, the truth of the matter, you saw what happened in Bucha. This warrants him, he is a war criminal. But we have to gather the information. We have to continue to provide Ukraine with the weapons they need to continue the fight. And we have to gather all the detail so this can be have a war crime trial.
Anne-Marie Horder, Bloomberg's Washington correspondent, joins us now for more. So, Anne-Marie, what do we know about continued push for more sanctions?
Well, we're going to be hearing about more sanctions this week. According to Jake Sullivan, the president's national security advisor, after the president made those remarks for all of us to keep a lookout, Jake said that they are working with their European partners and there will be more sanctions to come this week. And then, Matt, what we have overnight, this is a Bloomberg scoop, is coming out of the U.S. Treasury. Basically, what they're saying is that Russia can no longer make payments they're supposed to make to overseas investors from Russian government accounts used and held in U.S. financial institutions. Now, remember, the U.S. already froze accounts of Russia's central banks and all those reserves they had in dollar-denominated currencies, euros, etc. But what they did have is carve-outs, so they could still make those payments to their investors. And now what they're saying is that is no longer allowed. And this came as a payment was due yesterday. And what the Treasury is saying, a spokesperson is saying, is that now Russia really has three options. They either have to drain the reserves that they hold at home in Russia, they have to use any new revenue they have coming in to make these payments, or they will default. This just increases the pressure on President Putin and really the economic situation on the ground in Russia.
All right, Bloomberg's Anne-Marie Horder down in Washington, D.C. for us. Thank you so much. Meanwhile, there's a new signal that China's President Xi Jinping may speak with Ukraine's Vladimir Zelensky for the first time since the Russian invasion. The foreign ministers of the two countries spoke yesterday. Meanwhile, the European Commission announcing this morning that EC President Ursula von der Leyen and High Representative Josep Borrell will be traveling to Kyiv this week to meet with Zelensky. Let's get more with our European correspondent Maria Tadeo in Brussels. So, Maria, what do we know about that planned visit?
Well, this is going to happen this week. A lot of the details are still pending, of course, all of it due to security reasons. But essentially what the European Commission and the European institutions want to do here by having Ursula von der Leyen on the ground meeting Zelensky is to really show that Europe is standing and supporting Ukraine. That's for the politics. But of course, the biggest question is what happens when it comes to the sanctions. Tomorrow, there will be an important meeting when it comes to potentially including energy here. But at this point, we have to make this very clear. There is no consensus yet on what that package should entail. It is also very clear that gas would be out of the question. So it really comes down to coal and oil. But again, what you really need to factor here is that when we talk about the European energy market, well, there isn't one. There's 27 different countries with 27 different systems and 27 different governments. And at this point, there is no unanimity behind any decision. So I would really refrain perhaps from making big assumptions about a big energy embargo, because it does seem from the information that we have right now that is possibly not on the table.
All right, Maria, thanks very much. Bloomberg's Maria Tadeo there in Brussels. Now to a Bloomberg scoop. JP Morgan is reviewing its business with some commodity clients after last month's nickel short squeeze. The move threatens to drain more liquidity from the sector. Eddie Vanderwall of Bloomberg Markets Live joins us now with more. And JP Morgan, obviously a monster in metals trading.
Absolutely. Absolutely. JP Morgan is a big deal in commodities, make no mistake. They are the biggest counterparty and a provider of liquidity in a number of markets. If they start pulling back, and we don't know yet that they will, but if they start pulling back, that will create a situation in commodities markets which are already really volatile, which are already seeing people step back because of that additional volatility and that additional risk, and it will just make them even harder to trade.
Well, along the same lines, it's been a headache for the LME and more headaches potentially coming for the LME. A great Bloomberg story about, yes, metals are still being traded through the LME, but more people are turning away. What risks could this pose for the metals exchange?
You know, it's really the full knock-on implications of the invasion in Ukraine and Russian assets becoming a little bit toxic. We really haven't seen the full implications of that yet, because we are now seeing a situation where a lot of people don't want to touch the metal, even though there aren't necessarily sanctions against them. But that just means that you're ending up with a two-tier system even inside the LME, and it makes it really difficult to trade metals and commodities which are already so volatile that a lot of people just don't know whether they should take exposure, Danny.
All right, Bloomberg's Eddie Vanderwalt of the Markets Live team, thank you so much. The headaches for the LME just seem to never go away. Meanwhile, Twitter is trading higher before the bell. That follows news that Elon Musk is now the social media platform's largest shareholder. And of course, Twitter saw the best day since 2013 yesterday on the back of that news. Joining us now for more is Bloomberg's Laura Wright. So, Laura, what's the latest? Who all has weighed in?
Well, Elon Musk putting his 80 million Twitter followers a newly announced stake in the social media platform to use by creating a poll asking participants whether there should be an edit button. So far, that poll has already received more than 2 million votes and a response from Twitter's CEO Parag Agrawal, urging participants to please vote carefully. Now, Cathie Wood, ARK Investment Management CEO, she spoke to Bloomberg Radio yesterday. It's worth noting her flagship investment fund has almost 10% of its assets in Tesla. Take a listen to what she had to say about Musk making a statement.
I do think for the moment it's passive, but he's certainly making a statement, and it's a statement about censorship. He doesn't agree with censorship for a smooth functioning democracy, as he has tweeted, I believe. And so I think he's sending a strong signal to the new CEO. And I also know there's some controversy about why Jack left, having to do with this new CEO. So a few messages there.
Now, over at Wedbush, well-known tech analyst Dan Ives sees this as just the start, believing that Elon Musk will go on to take a more aggressive ownership form at Twitter. Meanwhile, over at Jefferies, brokers see Twitter's intraday gain as overplayed. But I'll leave you all with the musings from one Twitter user who believes Elon Musk is playing chess while the rest of the world are finding their checkerboards.
Laura, I have to just jump in here and ask, what was the response? What was the result of the poll? Do we need an edit button or not?
I think it looks overwhelmingly likely, Matt, that there's going to be an edit button. So good news for you.
All right, Bloomberg's Laura Wright, thank you so much. Now, of course, as we mentioned, Twitter is trading higher before the bell, but other social media stocks are actually moving in tandem, as they did yesterday. One of them being Snap, which was higher by about 5% in the Monday session. It's up another 0.6% or so in early hours this morning. Also moving higher this morning, cruise lines, specifically Carnival, really leading the way. The company announcing after the bell yesterday, it just had its best week of bookings on record. That is the week through April 3rd. So that lifting those shares to the tune of nearly 4% this morning. And another group of stocks I did want to check on is Chinese tech companies listed here in the U.S. Danny, you mentioned it and I missed it. I thought China was just closed overnight. Hong Kong was as well. So that big Hang Seng tech rally was from Monday. But of course, again, that is on optimism around the auditing rules, potential that these companies will not be delisted. And you are seeing the gains continuing in the U.S. session today. DD Global, of course, that Chinese ride-hailing company, up by about 0.33% before the bell, Danny.
Yeah, really in the Asia session, the only exciting thing was that Aussie dollar move off the back of the RBA. Kailey, great roundup, and we're going to get back to the wider market conversation now that more markets are up and running with Asia on holiday. We're going to speak with Mark Tankert, Huska Fund CIO. And later in the program, former UK ambassador to Russia, Andrew Wood, as more EU members think about increasing sanctions to Russia oil and gas. And of course, don't miss Matt and Kailey on Bloomberg Crypto at 1 p.m. New York time. They're going to be speaking to Harvard professor and crypto skeptic Ken Rogoff, as well as the Association for Digital Assets Market CEO Michelle Bond. This is Bloomberg.
Welcome back to Bloomberg Surveillance. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller here with Kailey Leinz in New York, Danny Berger out in London. Anna Edwards is off today. You don't hear much about Dow transportation theory, or Dow theory anymore. I don't know why that is, but the idea goes like this. When you have a drop in an index that covers trains and trucks, now the transports index, used to be the railroad index, that signifies bad things for the U.S. consumers. We're not ordering enough stuff. Factories aren't getting enough deliveries. We're not seeing enough production. And we've had a big slump in the Dow Transports Index, down 7.3% over the last 4 sessions. It's the longest streak of losses since December. And that could signal that this mini rally that we've seen, this bear market rally that we've seen is over here. That's a concern. Lynn Thomason joins us, Bloomberg Markets managing editor, to talk about this. Is it a warning sign, Lynn, still?
I think so, for sure. I mean, goodness, the Dow Jones Transport Theory has been around forever. And yeah, I mean, I think there's a good reason why people still listen to it. Clearly has, a message for the U.S. economy. And it's, if it's going down, I think there's messages that, investors are concerned about what the economy is going to do next.
Lynn, we're just getting an email through 2 Bloomberg reporters from Russia's finance ministry, basically saying that oil and gas for March, the income there was about $3.6 billion less than planned. Certainly, Russian oil and gas has been top of mind with potentially increased sanctions. Are we at a point where traders are comfortable starting to price that into markets?
Yeah, I think, clearly investors are pricing in what's going to happen next with Russian oil and gas. And that's, the big theme that's driving everything across the board. You're seeing oil up today. And I think, the interesting part is that it's clearly there in the sentiment. But what effect these sanctions take and what they actually do is still a big unknown.
Well, and obviously there's been a lot of volatility in the commodity market, Lynn. There's also been a lot of volatility in the bond market, and yet it seems that has calmed somewhat. We have a 2-10 curve that is back to only being inverted by about 1 basis point. What do you make of what we're seeing, or are we just waiting until the Fed minutes tomorrow?
I think we're waiting till the Fed minutes. I think everyone is sort of on tenterhooks of what the yield curves are going to do. You're seeing the question, is Dow theory still relevant? Is the yield curve still something that points to a recession? And I think that's why everyone is talking about the yield curve right now.
Yeah, every day we get closer to ripping up those CFA textbooks. Lynn, thanks so much for joining us today. That's Bloomberg's Lynn Thomas. And of course, for more market analysis, MLive Go is where you want to head on your terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Danny Berger in London. Now keeping you up to date with news from around the world, here's the first word. The U.S. Senate has set Ketanji Brown Jackson on a path for confirmation to the Supreme Court this week. Debate begins today on the nomination of the first black woman to be nominated to that high court. Jackson's confirmation is all but certain now, as 3 Republicans say they'll vote in favor: Susan Collins, Lisa Murkowski, and Mitt Romney. In Shanghai, a sweeping lockdown of the city's 25 million residents and mass testing has uncovered extensive spread of the coronavirus. The city reported more than 13,000 daily COVID cases for the first time. China's current outbreak is surpassing a level not seen since February 2020. Bloomberg's learned that Citigroup has temporarily halted IPOs of new special purpose acquisition companies. The bank wants more clarity on recently proposed rules. Among other topics, Citi wants feedback about underwriter liability. A plan by the SEC to tighten oversight of SPACs could make it easier for investors to sue. And in sports, Kansas made history last night in New Orleans, beating North Carolina 72-69 for the NCAA's men's basketball championship. The Jayhawks rallied from a 16-point deficit, the largest ever in a title game. It's the fourth time Kansas has won the NCAA title. And Matt Miller, I came in 37th out of 40 players involved in the TV Newser bracket, so I failed miserably, but the winner of that TV Newser challenge, Bloomberg's very own Michael Barr.
Oh, the voice of Velvet,
Yes.
Michael Barr. Congratulations to him. Who was the loser?
Someone from a
40?
rival network who I shall not name.
Well, what about from our
very
network?
interesting.
Who came in last in terms of Bloomberg?
That would be me. That would be me,
I see.
Matt.
Okay. Sorry about that.
Kaylee, I'm going to step up and save you here. Let's talk about what's coming up on the program. It's Mark Tinker, Tosca Fund CIO. This is Bloomberg. This is Bloomberg Surveillance, the early edition. Here's what you need to know. The U.S. Treasury is increasing pressure on Moscow to find alternative funding sources to pay bond investors. Authorities have halted dollar debt payments from Russian government accounts at U.S. banks. So far, Russia has stayed current on its foreign debt obligations. A move by JP Morgan could drain even more liquidity out of the nickel market. The bank is reviewing its business with some commodity clients after last month's nickel short squeeze. JP Morgan teams are conducting due diligence on some existing customers. And Twitter's biggest shareholder has asked his followers whether they should have an edit button. Elon Musk conducted the poll hours after he revealed a 9.2% stake in Twitter. CEO Parag Agrawal responded to the poll by calling it important and urging users to vote carefully. I'm Danny Berger in London, in for Anna Edwards. Matt Miller and Kailey Leinz are in New York. And Matt, I know yesterday the excitement in the U.S. market was all about Twitter, but obviously the macroeconomic implications of Russia and more sanctions taking hold in terms of market drivers today.
Yeah, first of all, obviously there should be an edit button on Twitter. I keep looking for that.
You know how Matt voted.
And secondly, like when I saw the sanctions news, I was like, wait, we didn't do that already? Wasn't that already a thing? But I guess not. In any case, there doesn't appear to be much movement in U.S. markets today, at least in terms of futures. We're still basically unched here, 45.74 on futures, down 0.07%. You do have a little bit of a risk on sign in terms of investors willing to let go of the perceived safety of government securities. Treasuries right now rising 2.4468%. The yield, I should say, rising. The price falling, of course, which is why it's red. NYMEX crude is up in the green, 1.4%. The gain to 104.78. So TI is trading at about $105 a barrel. And another risk on sign is Bitcoin. It's only up 0.8%, which in Bitcoin terms isn't much of a move. But the fact is it's had this slow and steady rise, and it remains relatively stable, right? 46,672, the level here. And it's been just creeping up and not posting these huge volatile swings. Kailey, what do you see in terms of pre-market movers?
Well, Matt, I look forward to digging into those Bitcoins moves with you later today on Bloomberg Crypto, 1 p.m. Eastern time. Don't miss it. But of course, before that, we have to see the open of trading. And before trading opens here in the U.S., we are seeing some activity before the bell. We were talking about Twitter, all the optimism around Elon Musk's 9.2% stake. Twitter had its best day since 2013 yesterday, up 27%. It's adding to those gains this morning, up about 2.25%. And other social media stocks like Snap getting a little bit of a lift as well. It's up 0.4. Another group of stocks moving higher is the cruise lines. Carnival out overnight saying that it just had its best week of bookings on record. As a result, that stock up 3.5%, and it's giving a lift to some of its competitors or peers as well, including Norwegian Cruise Lines, higher by about 2.6% before the bell, Danny.
Kailey, there's this point when technology was the best performing sector in Europe too, which kind of makes no sense at all if it's about Elon Musk taking a stake in Twitter. But perhaps cooler minds have prevailed and leading European stocks higher, which I should say the benchmark is up about 0.2%, are energy stocks thanks to oil moving higher. But a lot of that has to do with the renewable space. The best performing stock is Vestas wind system, which of course makes renewable energy sources. So that sanctions story really weighing and dictating the pace and moves of European markets today. So basic resources, those are on bottom of the pile as we look at energy, at material companies rather having to deal without access to Russian supply. We also had comments from ECB governing members overnight talking about potentially getting back to normal rates, to non-negative rates by the end of this year or the turn of this year. So we're seeing a sell-off take hold in European bonds, be it Germany, be it UK. 10-year yields for both of those down at least, at least 4 basis point. Price down, yield up. Now looking at Russian assets, snapping 3 consecutive days of gains. We're looking at Russian stocks fall about 3%. It's not just sanctions, it's also really weak PMI data coming out of Russia, showing a decline in services, the most since the pandemic. Meanwhile, a weaker ruble, stronger dollar throughout the session. And finally, Matt, we're also looking at 10-year bond yields in Russia up about 1 basis point.
I gotta say, I continue to be impressed by the ruble. I mean, 83, that was the same kind of level we were seeing before the invasion. So it's done a complete round trip, and it makes you wonder if European countries paying for Russian oil and nat gas aren't allowing the country or Gazprom to convert their euros into rubles at a rate that Putin has picked. It's very interesting indeed. The other really interesting thing that we've been following over the last couple of sessions is the yield curve inversion. We saw a slight 2s, 10s inversion on Friday that has then stuck around. But the term premium inversion is even more serious because it's the most that we've ever seen the term premium curve inverted. Mark Tinker joins us right now, Tosca Fund CIO, to talk about what this all means for the economy, what this all means for markets, most importantly. Mark, how do you view the inversion?
Good morning. Yes, well, I think historically the yield curve has given us signals, and a lot of people think it's the only thing that matters. But obviously, right now, there's a lot else going on. And really, this is all about what's going on with our basic price of commodities, which feeds into everything and feeds into inflation. So the big difference this time is every time we've had a crisis in the last 10, even 20 years, the Fed has cut interest rates. Now we've got a crisis and the Fed is raising interest rates. So it's throwing everything upside down. And at the moment, if you haven't got to buy bonds for regulatory or other reasons, why would you be doing it right now? And I think now that you've got no carry trade, now you've not got a real yield, I think there's a big flight from the bond markets, and that is causing a lot of volatility. And the volatility in the bond markets means other people still can't hold bond markets. So the whole thing has been thrown up in the air, and it's really, obviously, much more to do with Ukraine and the legacy of COVID as well. We shouldn't ignore that.
Among many things, this does feel like the great conundrum for asset allocation. That bond section isn't working as your insurance policy anymore. The yen certainly doesn't appear to be. So where do you turn to?
I think ultimately what we're seeing here has been this melt up, if you like, in equities, where people are saying, well, I need something that actually is making cash flow, paying a dividend, and basically is going to deliver me returns to meet my needs, rather than rely on somebody else to pay more for it in the future on a kind of speculative basis. So, yeah, we've still got the growth themes, but I think it's the focus on cash flow and quality that people are saying, I can't have that bond. Give me some quality stocks, give me some cash flows, give me some boring stuff, please. I don't want volatility. I'm an investor, I'm not a trader.
Yeah, but Mark, how large is the threat to some of those companies that to this point have been able to exercise pricing power, but in the face of even higher inflation, greater costs faced by their end consumer, that price tolerance may be starting to dwindle a bit?
Yeah, you're right. I mean, this gets to the whole essence of have we got long-term sustainable inflation. What we have got here is a gap up in effectively input prices, and can you pass that on? Well, it depends what the competition is for your product, and also the prices that are rising at the moment. They're not going up because we had too much money circulating in the system due to the Fed. They're going up because actually we've got a lack of supply of the basic things. Now, what that means is that crowds out. So actually we could
very well have this issue about stagflation, which basically means that having to spend so much more on heating and eating now, because obviously the impact of the Russia-Ukraine situation on foodstuffs and fertilizers means that there's much less money to spend elsewhere. And governments aren't really helping. They're putting up taxes to pay for everything they did in the last 2 years, but they're also putting up interest rates. So in places where you've got floating rate mortgage debt, which we certainly have here in the UK and a lot of the Anglosphere, that's another crush on the ability to have any disposable income. So actually, I'm not buying into this sort of hyperinflation for everybody. I think it's going to be a big squeeze. If you're not an essential, you're going to really struggle, particularly if there's competition.
Yeah, it's interesting, Mark. I mean, coming from, in the U.S., most mortgages are going to be fixed 30-year mortgages, but obviously in Europe it's a different story, and that affects consumers. European consumers seem to be having the hardest time, right, with regards to inflation, with regards to heating bills, possibly pushing people into poverty with regards to floating rate mortgage payments. Is the European economy going to do much worse than the U.S. economy in the coming year?
Well, when it comes to the mortgage payments, just to pick on that one for a start, the continental European don't have the same mortgage issues that we do, say, in the UK or Ireland or Spain. And in fact, when we had previous tightening, you notice there's a big difference between France and Germany and the Netherlands, for instance, where they didn't have that issue with the mortgage debt. But the big issue at the moment, of course, that we have is that we've pursued this policy, particularly with the green energy. The problem is you've got wind farms and solar panels. When the wind doesn't blow, and the sun doesn't shine, you have to back it up with gas. You can't back it up with nuclear. Now, we will be moving to have a lot more nuclear, which is, a medium-term trend. But right now, you've just got to buy the gas. You can't not do so. And this is the cost of living crisis. And it really isn't being helped by government policy, whether it's raising interest rates or whether it's actually continuing to raise taxes or even not take away some of those taxes that are supposed to be driving our green energy revolution. Now, take some of those subsidies away for 5 years. So, OK, we get it, but people are going to go that way anyway. So why don't we take off that 25% extra? But they're not doing that at the moment. Governments are very, very one-track minded, and that is going to really harm the consumers right across Europe, but for different reasons.
Mark, afraid that's all we have time for, but really great to have you on the program
Pleasure.
This morning. That's Mark Tinker, Tosca Fund CIO. Now, coming up with Matt, Kailey, and me, it's Chatham House Associate Fellow and former UK Ambassador to Russia, Andrew Wood. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an exclusive interview with Kansas City Fed President Esther George. That's at 10 a.m. in New York, 3 p.m. in London. This is Bloomberg.
All eyes are on not just Russia and Ukraine, but all the rest of us in terms of how we're going to react. And there's a complex set of dynamics at play, certainly on the economic front.
That was Catherine Tai, U.S. Trade Representative, speaking with Bloomberg earlier. Well, for more on Russia and Ukraine, Sir Andrew Wood, Chatham House Associate Fellow of the Russia and Eurasia Program and former UK Ambassador to Russia, joins us now. Ambassador, great to speak with you. We've learned this morning that Ursula von der Leyen as well as Joseph Borrell will be heading to Kyiv later on this week to meet with Vladimir Zelensky in person. The European Union is under immense pressure to do something in reaction to the allegations of war crimes by Russians in cities like Bucha in Ukraine. What is an appropriate response, and what will Vladimir Putin respond to?
Second half of your question is more difficult. In a way, it's easier to answer because I don't think he's going to respond to anything on this particular front, apart from saying, your accusations are all false and made up, and you've consistently lied, and you don't understand the situation, and so on. We're always familiar with the Russian reaction like that. The difficulty for the EU, or parts of the EU, is that the particular question of oil and gas for them is really quite a difficult one. It would cost them quite a lot in terms of punishment if they did what a lot of people would wish them to do, which is to suspend the Nord Stream gas and so on.
Isn't it worth it, Ambassador? Isn't that worth it? I mean, especially after we see the atrocities committed in Ukraine, shouldn't they, isn't it their duty to stop funding Vladimir Putin's war?
Well, yes, certainly. That's what I think. But I'm not in the EU and I'm not in control of the various parts of it anyway. But various parts of the EU have slightly different reactions to what's going on in Ukraine. Obviously, if you're Polish or Estonian, you have one sort of view of the situation. But if you're some other countries, you have more hesitation, I would say. Not right. Huge, but they've got to come to some sort of decision about it.
Right, and we've seen that hesitation from countries like Germany and Austria, but you see hesitation as well in terms of how far the West is willing to go. We heard from the UK yesterday, a spokesman saying that they don't want to be escalatory in this war. What is the limit to steps that the West can take without it becoming a World War III type scenario?
Well, I think by remaining on the without actually taking physical part, you may have an interesting discussion as to what physical part means, because after we and others are supplying military support in the terms of equipment and ammunition and so on, we're certainly offering support in terms of money. But what we don't do is ourselves take a direct part in fighting Russia.
Ambassador, if I can just jump in, I mean, I do wonder what second-order effects will be for countries, even if it's not a direct intervention. You look at Peru, that's dealing with inflation, civil unrest there are protests, there are curfews now. Sri Lanka dealing with a similar problem as well. To what degree do governments look at this around the world and say, okay, if we sanction Russia, we're going to face civil unrest as well?
Well, I imagine a lot of them do have that hesitation, because sanctioning in the sort of really strong sense that the United States and its allies have is one thing. But if you're in Peru, it's much easier to say to yourself, this is not something which is directly to do with us. And there are countries in Asia, for example, who don't really feel this is anything directly to do with them at all. So there's bound to be some hesitation.
What is the likelihood of a war crimes tribunal convicting Vladimir Putin, Ambassador?
Well, about as likely as him actually arriving in The Hague to face trial. I think that he is undoubtedly guilty and therefore vulnerable, but he's not going to leave Russia in order to expose himself to that. And in any case, they're going to use the United Nations and everything else to deny that there is an issue which they need to answer in any case. So it's all very preliminary. Plus, lastly, this is not a war which is going to end very soon, in my view anyway. I think it has a different phase to go through in a sort of battle for the east of Ukraine, which I hope the Ukrainians will win. But that has to happen before there's any real negotiation for a solution.
Ambassador, thank you so much for joining us today. That's Sir Andrew Wood, former UK ambassador to Russia. Well, coming up later today on The Balance of Power, we're going to be speaking to former U.S. Secretary of the Treasury, that's Jack Lew, 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
I will say this could be setting up for another leadership change at Twitter. You never know. And I'm not jumping to this conclusion automatically. I'm saying it's one of many possibilities. It'll either be Agarwal changing the policy of the company to, really open source the censorship or call people out on censorship, or it will be a management change. I don't know what's going to happen.
That was Cathie Wood, ARK Invest CEO and Twitter investor, speaking exclusively with Bloomberg's Carol Master and Tim Stenovic yesterday. Now joining us now, Tom Keene, co-anchor of Bloomberg Surveillance. All right, Tom, give it to me. What's your single best chart?
Single best chart is the humility out there, the silence you hear from the bears. It is a really gloomy tone out there. You see it in every confidence study, every single Kailey idea, bull, bear, whatever. Everybody's a bear. Guess what? The VIX shows this is a great bull market. We are 4%, 5% under SPX and Dow drawdown. We are 8%, 9% under NASDAQ drawdown. We're getting right back, not near the average of pre-pandemic, but we're really getting back to levels that shock the gloom crew.
You know, the interesting thing is they've just approved leveraged ETFs on the VIX again after Volmageddon got them canceled previously. What do you think about these kinds of, weapons of mass destruction in the forms of derivatives?
Here's what I think about it, Matt, very simply. Everybody has an ability and permission to lose money. Leverage is, we know, a triple-edged sword and all the cliches that are out there. There's a lot of really, really good math on this academically. And when you get over, here's the number, 1.38 to 1 leverage, it becomes sporting and grossly uncertain. So if you're leveraged 2 to 1, 3 to 1, 4 to 1, there's a huge amount of uncertainty out there unless you have the triple leveraged all cash fund.
And
That's
we know
different.
that you do, Tom. Tom Keene, co-anchor of Bloomberg Surveillance, thank you so much for joining us this morning. Now a look at what else we're watching. I am continuing to watch the winners and losers from the NCAA Men's Championship. Of course, the real winner was Kansas, but also we have a winner for the Bloomberg Brackets for a Cause Challenge. Of course, this is all for charity. It's a competition that pits a lot of the leaders in finance and business against each other. The winner this year, John Gray, the president of Blackstone. He has won because he had Kansas going all the way, and he indeed was right. He now collects $265,000 for his charity, the Bassler Center. So he fared a lot better in his bracket than I did in mine, Matt.
Wow, those are some big purse numbers there.
Yeah.
Very cool for charity, Kailey. I'm watching crypto. You're watching crypto as well, not because of the moves that we see today or even of late. Bitcoin slow and steady rise, I think, impressing a lot of people, but because we have a pretty new program that airs every Tuesday at 1 p.m. Today we have Ken Rogoff. Tom will be jealous, a crypto skeptic, to talk to us about his views on the asset class, the markets, and regulation that's still needed.
Yeah, Matt, you'll be watching crypto. Kailey will as well, but I'm kind of going to be literally watching crypto because I can actually watch a program because I'm not on it. So I, for one, will be tuning in. Well, besides that, I'm going to keep a close eye on JP Morgan, as well as any more banning potentially of Russian coal. Lines just crossing that the EU is proposing banning coal imports from Russia. That's after those alleged atrocities. Well, yes,
I mean, that's
that
not
is
a difficult
true, but Matt,
sanction to apply. You know?
Yeah, but Matt, this is the thing. More people turning to coal, maybe not Russian coal, but coal in general.
Yeah,
if
I know,
they
but
can't
Germany
get their hands
has
on that
more
Russian gas
coal than
supply.
they know what to do with already. I mean, they need to ban gas and oil. That's what's going to deliver Vladimir Putin like another $320 billion this year.
Yeah, I mean, to be fair, we have heard voices from the EU, Dombrovskis, Lemaire as well, saying that we do need bans on oil from Russia. But again, so far, it's just the EU proposing from coal. Well, we'll stay ahead of those market moves for you, but that's it for Early Edition. Bloomberg Surveillance is up next. This is Bloomberg.